Meta stock just received a massive vote of confidence from one of the most successful investors alive. We're talking a 12,500% increase in one quarter. Yes, you heard that right. As you may know, I recently purchased a significant chunk of Meta stock myself. You can find that video on my channel and hit like or subscribe if my videos provide you value. Now, let's talk about this big move in Meta. In Q3 of this year, Citadel, Ken Griffin's hedge fund, bumped their Meta position all the way up by 12,500% to 1.96 million shares, worth around $1.5 billion. That's not let's test the waters. That's we're diving in head first. And look, this isn't some random fund. Citadel is literally one of the top 5 hedge funds in history. And Ken Griffin, he's one of the top 3 and in some metrics top 2 most profitable hedge fund managers ever. So when a guy at that level makes a huge move, you at least want to understand why, right? Now, before we even get into the stock, it's worth understanding Griffin's philosophy because it explains why this move is interesting. Check out what he said during an interview a few months ago.
The first question is, put yourself in the room with the colleagues. If you're the smartest person in the room by far, you're in the wrong room. Like, you need to find a different room to get to. You should never, ever say, I am the smartest person in the room. You may be the smartest person in a particular topic, particular area of interest, but if you are just hands down the smartest person in the room, you are in the wrong room.
If you're the smartest person in the room, you're in the wrong room. Ken Griffin prefers to intentionally surround himself with people smarter than he is. It's a humility-driven approach that's extremely rare at the top of finance. I mean, this guy's worth $50 billion. You'd think that type of money would amp up his ego. On the contrary, his willingness to learn, adapt, and check his own ego is a big part of why Citadel has consistently been so successful. On top of that, Griffin has a decades-long track record of crushing it in chaotic markets. 2008, 2020, 2022, all years when a lot of funds got wiped out. His philosophy is pretty simple. Strike hard when the market misprices something. And Meta stock might be exactly in that situation. Now, let's put this in context. During Q3, Meta was trading above $700, roughly in the $734 to $750 range. That is significantly higher than where it is today, which is under $600. So Citadel chose to increase their stake by 12,500% at a higher price than today. Since then, Meta has beaten earnings across the board, increased their daily active user count to 3.5 billion daily active users. That's nearly half the global population. They've grown revenue with a $50 billion annual run rate for Instagram Reels, shown strong ad performance, and continued heavy investment in AI and infrastructure. So here's the takeaway. When a top 5 all-time hedge fund run by a top 3 all-time manager increases a position by 12,500%, it tells you something. This isn't about short-term trading. This is a massive long-term conviction bet on Meta's future. Smart money doesn't chase hype. Smart money buys when the multi-year payoff looks asymmetric. And Meta, right now, checks those boxes. Whether you agree with the move or not, it's at least worth paying attention when the quiet humility of someone like Ken Griffin shows up with a $1.5 billion vote of confidence. No one knows how Citadel will react to the recent price drop. If Citadel had the conviction to buy aggressively above $700, wouldn't they see even more value now that Meta is trading well below those levels? Or was their move in Q3 a mistake? No one knows. Only time will tell. If you like this breakdown about Meta stock, you might find this video helpful. 5 reasons I bought Meta stock. And if you're interested in big purchases by a Goliath investor, I recently posted a video about Warren Buffett's massive $4.3 billion investment in Alphabet, which owns Google, also in Q3 of this year. Check out my channel for both videos, and don't forget to hit like, subscribe, and ring the bell. I'll keep diving into exactly these kinds of big money bets and what they mean for the average investor. Thank you.